Hello, everybody. Hopefully everyone can hear us today. Welcome to Pepperstone, another Pepperstone Learn It Live webinar series, Trading Techniques, How to Get Started with Scalping. My name's Thomas Atkinson, as always, joined by Tyron Novella.
Hi everyone, and thank you for joining us tonight. We're going to be looking at all the little tips and tricks for scalping and pretty much how to get started with it for the people who are new to it and also potentially wanting to advance their skills in it. So we're going to be covering a few different strategies in this area.
Perfect. Just before we get started, everybody, obviously need to go through the risk warning. The information provided in these videos has been produced by a third party and does not reflect the opinion of Pepperstone, and the information has been provided without any alteration or verification and is obviously only general in nature. So please seek independent financial advice if necessary before making any decisions. So what are we going to be covering today, Ty? Well, a few things. Well, firstly, how to scalp. Pretty basic stuff, but we will be talking about that today. Then we're going to be having a look at some different scalping strategies and how to follow a rules-based approach. The most important thing in scalping, or the most important thing probably in trading, is following a business plan or following a rules-based system. Scalping is very, very easy to get carried away. And I think, Ty, you and I have been there. We've trained thousands of people over the years, and realistically, it's one of the biggest downfalls of scalping is the fact that you are constantly usually taking trades upwards of potentially 10 to 20 in a day. And if you're not following rules-based approach, one or two bad trades can undo all of your good work.
Yeah, and then the revenge trading kicks in and it can turn quite nasty after that. So yeah, you definitely don't want to be too carried away with it. Look, scalping is a strategy. It's not a gamble. Like a lot of people actually apply the gambling mentality to it, but it's certainly not a gamble. It's a strategy within itself. And yeah, we'll be talking about the rules that you want to be following to do it successfully so you can actually get the most out of it without, being taken to the cleaners.
So another thing we'll be looking at is how to manage your trading risks when using a scalping strategy. So it really goes hand in hand with a rules-based approach. You need to really be on top of your risk management. Another great big downfall of the scalping strategy is managing risk. So this is a slide we've used a little bit. What is scalping? So scalping is really a trading style specializing in taking profits on small price changes. Now, Tyron, you and I were actually having a discussion about this today, and scalping really often means that you could be in a trade for less than 5 minutes. So you'd be in a trade 1 to 5 minutes. You may not be necessarily in a trade for a couple of hours. That's what day trading traditionally has been called, where you might be in a trade for a couple of hours. The biggest problem I have, I think, with the term scalping nowadays is if we limit scalping to the concept of just a couple of minutes, I really feel that's where algorithms have traded or taken over a little bit on the markets. Even since we've really gotten heavily involved since 2008, algorithms have made a massive difference to the Forex markets and markets in the general whole. So I like to think of scalping as anywhere from around that 1 minute chart up to 15, maybe 30-minute chart, where you're going to be trading generally between a 15-minute time frame, like in terms of being in the trade, all the way up to maybe 2 to 3 hours. I mean, what are your thoughts on that one?
Yeah, I think, look, in the day, probably about 8 or 9 years ago now, I guess, like the 1 minute was where it was at because you could definitely scalp into there and you could be in and out in minutes quite comfortably. But like you say, a lot of that has been taken over by the automated trading, the EAs and the algorithmic trading that really is just so fast and using, spread manipulation and all sorts of, crazy fandangly things that it makes it very difficult to actually trade in and out of those positions easily. So the natural transition obviously is to move up a time frame or two. I mean, you can still use the minute for potential entry points, but really where it's at is probably looking at the patterns and the short-term trends on the 5 minute and the 15. And that's where that's where really scalping has probably evolved to that, probably hour or 2 hour sort of trading window now, rather than just the couple of minutes in and out, because that is starting to get dominated, especially on the major pairs.
I've got some great examples actually in the market tonight, Ty, that have happened recently. So over the last day with some scalping opportunities and different types of setups. So we'll take a look at those and see how long you might have been involved in the market for, because some of them are really short, some of them a little bit longer. So one thing is for sure though, whether you're a day trader or a scalper, time intensive, chart intensive. Very much so. If you are planning on sitting down every night and doing 3 to 4 hours in front of the charts, then you could be a scalper or a day trader from that aspect. Or you don't have a job and you're just full into this kind of thing. But if you're somebody that wants to trade maybe 15 minutes to an hour a day, and that's all you've got, we really encourage you to look more to a swing type of strategy, because a swing type of strategy is going to use the 4-hour daily timeframes, and it's going to be a lot better for your time. And it's really important to be consistent. You know, one thing we see is people will go really heavy one week, and then the next week they might only look one day on the charts. There's not always great opportunities, so you've not got to be consistent. If you just pick Tuesday, Wednesday, Thursday, and they're your scalping days, you know what, they're great days, Ty, to be doing that. You've let the markets all open, because obviously in the Monday morning Australian time, we don't have the US market open to give us direction, or the London market. So we really think that Tuesday, Wednesday, and Thursdays, they're some of the best days for scalping strategies, but also some of the best days for all of your types of strategies. So we really suggest you look at those. More transactions, but often higher fluctuations in account balances. So it comes hand in hand with having a rules-based approach. You have to have a strong mental psyche. If you're not strong and you think that you might let it get out of control one night, or you've had that happen to you in the past, again, we really suggest that you stick more to the swing trading, because if you don't have a strong risk management, it's really difficult to be successful in the scalping strategies. You also need a strict entry and exit strategy for sure.
Yeah, no question. And the thing is, you're going to hear us mention risk management a lot tonight. And the reason for that is that when you're scalping, I think it's almost one of the most important things of any scalping strategy, that you actually have a really tight risk management approach, because without that, even the good scalpers will come undone, because at some point the market will get hold of you. And the point is, you really want to, if the market does, get you, which it will, because scalping is a very high turnover, not so much low probability, but your risk reward ratios are going to be rather small. So, when you're talking about swing trading and the longer term trading, you're talking about 3, 4, 5 to 1 risk reward ratios. But when you're scalping, a lot of the time it is going to be 1 to 1, and maybe 1 to 2 at most. So with those sorts of risk reward ratios, you are going to have a reasonable amount of trades actually go against you. So if you've got a good risk management approach, there's not going to be a problem with that, because as long as you're obviously winning more than you're losing, you're going to be in front and you're going to be comfortable. But the people come unstuck, and we see it all the time, all day, every day, is when they just let their losses run because they think it's going to turn around, and one bad trade will wipe out, potentially 10 or 15 good ones, or worse. And that's when it all falls apart, because then many traders will try and get it back quicker. They'll take extra risk to do all the things that you really shouldn't do, all the things you shouldn't be doing. And that's the irony, I think. A lot of the time, people actually know they're doing the wrong thing, but they're just trying to get out of a jam. And that's the one thing you never ever want to be doing when you're trading, especially when you're scalping, because if it's ever going to come undone, that's the time it's going to.
So step one in terms of scalping as a primary versus supplementary style, it's pretty important that you consider whether you want to be a scalper all the time and you want to have that as your primary style, or you want to potentially bring your scalping into a supplementary style where you become an expert at scalping, but at the same time you have other trading styles and you take advantage of certain situations. Sometimes markets are going to be better for scalping than other markets where they're more trending and you might have a better advantage in the swing trade. Just something to think about when you're starting to make a decision to become a scalper or not. In terms of market conditions, or step two, is the market range bound or trending on larger timeframes? We always suggest you look at that 1 hour, 4 hour daily, see what the market's doing. Got a great example. I'll bring that up straight after this slide. And then of course you want to choose the time frame for your setup, whether it be a 5, 15 minute, 1 minute, 30 minute, or 1 hour time frame. You generally get quite a lot of opportunities with all of those time frames, at least multiple a day, especially on the 5 and 15 minutes, if you have 10 to maybe 20 pairs. Spend time learning the way the market moves. It's self-explanatory. Each different Forex market will be slightly different. Right now, you may have noticed that The pound is obviously incredibly volatile due to Brexit. We're starting to see a lot of pound buying actually, which is a little bit, it's kind of like the risk off, and people are starting to take positions with the idea of speculating. And these are big market movers. And of course, the pound is now moving incredibly heavily, and we'd expect to see that for the rest of October. But you want to be aware of those types of things and then make your decisions based on those. So Ty, let's take a look at the market, what everyone likes to see. So I've got a few things here. I thought I'd just show everybody this, and I'm glad it's actually doing what it's doing, because this is a really great example of a quick scalp that you could have got in on the pound yen. Now, if we just go to a 1 hour, Ty, I don't think it takes a rocket scientist to know that this pound yen has been in a bit of an uptrend, at least for the last couple of hours and days. I mean, it's been very, very strong, very bullish. I mean, you would agree with that, yes?
No question.
No questions. It's very, very easy to see. So what I've actually done here is, it was on such a tear that it barely was pulling back. It pulled back once here and then it's come back up. The reason I wanted to highlight the zone that it just recently went to is this is a great scalping opportunity that you're going to see time and time again on breakouts and strong trends. You've got a high over here where the market's reached a high. It's then blown through that high with a massive candle, obviously on the hour we are right here. And then it's come back down and it's hit where the previous high was. And this is a point where we call role reversal. And you really need to learn about role reversal no matter what market trading style you do decide on. But when it does hit this resistance or this previous peak acts as support. So let's have a look at the smaller time frames. Let's just jump down to a 5 minute and see how the market reacted to this zone. So we can see that over here on the left-hand side is the high. Let's highlight that. And then the market's come down and it's hit that point. Generally speaking, with a high level of statistical proof, this first point, especially in such a bullish, strong momentum market, will generally act as support, and the market will buy, and there's a high chance that it buys into the previous support or resistance. So in this case, it would buy into the previous resistance. So if we just zoom in now, Ty, and have a look at what we're seeing on the charts, I thought this was a great opportunity and a great kind of example of this. We've got that buy up zone, and we've got definitely the level of take profit, which is right here where we've had multiple touches before. 1, 2, 3, breaks through, comes back up. This would be your entry. Stop loss obviously under here. And then of course, take profit up here. And this happens all the time, but it's a difference of knowing that on the 1 hour, it's been in such a strong move, understanding role reversal, and then understanding that this is a scalping opportunity and you need to be in and out incredibly quickly, which is what happened here. What are your thoughts on that one, Ty?
Yeah, absolutely. That's a classic scalp. And the thing is, a lot of people will probably say, well, you know, how would you have known to buy there? And this is why it's so important to actually go out on some of those bigger time frames. So if you're looking at trading the 5 minute, you need to be getting out to the 15 minute and the 1 hour time frames to set those levels. So that line should have been there already well and truly before the that price reached it. So really what you're waiting for, when price did actually break down, you were waiting for it to actually reach that zone. It's not just a guess because that's the area that we think we're going to buy. Like, that's the area that was already highlighted by that previous resistance. So what you were effectively doing there was waiting for this to basically get down there. Don't worry about the fact that, you know, it was a 137.80, which is a really important zone because of the 80-20 rules. But the fact of the matter is, that line should have already been there. So that should have been your expectation to actually get into that trade. And the exit is just as important, because not only did it get up there and touch that previous support, it's only short term, no question. It's only a 15-minute chart that we're looking at where we've got some support, but that's enough. When you're scalping, that's all we're after. Like, we're not looking for, you know, big momentum moves that's going to change the direction of a trend. All we're looking for is either a retrace back to a specific zone or just a short and sharp move. Now, there were a few reasons why you would have taken that out. Yeah, you would have taken that out because it obviously hit the role reversal zone. It hit the 20 and it hit the 50 moving averages. Yeah, there's 3 reasons right there why you would have taken it. But probably just as importantly, it's also a 50% fib of that move. And we know this because it's pretty much half of the distance of that swing. So we can, if we draw a fib, we're gonna see that's gonna be at the 50. So a lot of reasons to be selling that. A lot of people would have sold it, and that's the thing. When I say sell it, I mean closing the position, but also it also could potentially give you an opportunity to reverse your trade, because yes, you've closed your long, but this is you're basically closing your long from the 137.80 and taking the short position, because more than likely, that's probably going to sell off there, because now that's a sell-off zone with basically going for the same area with a pretty reasonably tight stop loss. Like, you're probably going to get a 2-to-1 potentially out of this trade, if it goes and does the business, because the swing hasn't been an aggressive one on the way up. So very, very important to draw up your lines on the bigger time frames so you can prepare for these little moves.
And I think one of the things that Tyrone pointed out there is there's a high reward to the risk on scalps, and that's what makes it so appealing. Often you'll get 2-to-1, 3-to-1 type of trades where you might risk $100, potentially make $200 or $300. That's very common in scalping, and it's over, and it's very, very quick. Obviously, you'd be in and out within, as we said, up to a couple of hours, if not a couple of minutes. So very, very appealing stuff. And one other thing you need to realize, though, is you're also going to have a higher statistical kind of variance. So you're going to have some wins, some losses, and you need to be aware of it's going to be like that. If you have a trading system and you're winning, let's say you've gotten used to winning 60 or 65% of the time because the market conditions are good for that trading system, and then all of a sudden one night you take 7 losses in a row and you think it's impossible and you dump your system, that is not necessarily true. You need to understand how your system works. I've seen a couple of interviews recently where people were talking about that and talking about their algorithms. You really need to give things a fair chance and understand how your system works and in what market conditions it works best. So that's why we say that supplementary style of scalping sometimes is the best. You bring it in when you know the market is reacting the best way. And I hope that makes a lot of sense to people, because we actually really like scalping. We just like to wait for the right market conditions and wait for these kind of opportunities. So there's the pound yen there, Ty, and it's called the beast for a reason. It moves quickly and fast, but hopefully that does make some sense to everybody. Another one I wanted to show quickly was just the gold versus odd over here. So here we've got gold versus odd. And I think it's pretty clear to a lot of people. We're on a 4-hour. I just want to draw this up so that everyone's fairly aware. We're kind of like trap price. Price is kind of range bound right now. So it's pretty good scalping opportunities for us inside of here. So I dialed down into a 5-minute before, Ty, and I was just looking at some of the nice patterns that are forming. And again, this is just to give you an idea of what scalping is all about. And this is what they call an ascending triangle. And this happened and it broke really nicely, and it really went on and did the business. So patterns that you see maybe and you hear about on the 4-hour, 1 hour can definitely be applied to your 5-minute, 15-minute. They happen all the time. Another thing happened that I thought was interesting on the right-hand side here, Ty, as well, where the ascending triangle, it broke out, went all the way up here, found resistance. If I was taking this type of trade, I actually would have probably gotten out of the trade somewhere around this zone here, because that's where there was so much problems before. But then when it came back down, look how the first time it finds support on that roll reversal point and then goes back into the previous highs. So it happens time and time and time again when you start to understand roll reversal, basic patterns, those types of things. So I really encourage people that are getting into scalping, start to learn about these things and watch some of our previous webinars where we do discuss some of these things with Pepperstone.
Yeah, I think the important thing to remember is that the patterns do play out exactly like they do on the bigger time frames. It's just that the stop losses and the take profits are relative, obviously, to the time frame that you're on. So we would expect a descending or an ascending triangle to play out exactly like it would on a daily chart as it would on a 5-minute. It's just that your expectation is basically the same, but from a pip standpoint or from a market movement standpoint, you just have to be a little bit aware that you're obviously going to be getting less of a return, but that doesn't change the stop loss to take profit. And I think that's probably one of the fantastic things about technical analysis, is that the learning curve, once you've actually understanding the patterns properly and where stop losses and take profits need to be is adaptable to any time frame or really any pair. It's just a case of understanding it and knowing that each pattern is going to play out in the same way. The only thing that's going to change is obviously the distance and the range, dependent on the time frame, because obviously an ascending triangle on a daily is going to have a far bigger return pips wise than basically an ascending channel on a 5-minute chart, as we can see here. Now we're getting quite a few questions about can we look at certain pairs. Look, what we run a webinar at 8:30, so about 15 minutes after this one finishes, that actually does analyze the pairs. So you can, everybody's welcome to come in. That Thomas will pop the that link in the chat window. So anybody who'd like to attend that webinar and is interested in what the current markets are doing and doing a live analysis, feel free to join us in the webinar starting in about half an hour, because we will be taking requests and looking at the individual pairs at that point. But yeah, this one's more just, we're going to focus on the ones that are specific to scalping on this one. So yeah, we'll pop that in the window and yeah, just click on it if you want to join.
Okay, so there's just 2 examples we want to show tonight because I think it's really important to see some of the reality of scalping in action, and that is what we're really about. We're trying to put the process of theory into action on the chart so you guys can see how it works. So that's just a little example there. So let's get back into the slides, Ty. I have posted that link, by the way, if everyone can see it in the chat. And we'll just talk quickly about channeling markets, because that's something we saw on that gold versus Aussie. So what a channeling market is where you've got a resistance and you've got a support line, and the market is really price action is locked between those zones. So very similar to what we saw on that gold versus odd trade. And if you went back and had a look at that in the video later, you'll see what we mean. Now, with the channeling market, the beauty of a channeling market is it is a perfect scalping opportunity and a perfect market for you to get involved in scalping opportunities. You know that the market's not necessarily in a super trend, and therefore it might get carried away, or you might try to counter trend it and it stops you out, or the stop gets a little bit too big, or it gaps you, or anything like that. You know that it's generally calm, and that's when the scalping comes out and the algorithms come out, and you really have a very good idea of where your take profits and stop losses need to be. So if I was trading in this market here and I was looking for, let's say, a buy at this point here, what we would then do is we would know that most likely you should never be taking a profit higher than the top of the channel. It may break out of the channel later, but you should never be taking a profit higher than the channel, and that gives you really clear, defined goals. Because you can say, okay, well, I'm going to take profit here. My stop loss is going to be wherever it is. Does this make sense? Am I getting enough reward for the risk that I'm taking? And you'll hear risk, risk, risk whenever you're talking to professional traders, because most of trading is about risk management. And it's a bit boring, but it is how it is.
Yeah, very, very important. And it's the maker or breaker of traders, and that I can promise you. So it's something that you really need to focus on, whether you're trading, semi-professionally, professionally, or just starting out. It's going to be a very, very important part of your trading journey right through, and it will never change. So pay close attention to it, because it will be the difference between making it and not making it in the currency markets, or in any trading market for that matter.
Another reason we love channeling markets, Ty, is that they also give us opportunity to see a new trend occur and then therefore to scalp that trend. So one thing about channels, if you just learnt one pattern today, not ascending triangles, not anything else, and you just learnt channels, you're actually doing yourself a massive service, because it is one of the fundamental teachings that you'll want to use for most of your trading journey. You'll always come back to horizontal channels. They're very easy to see, very easy to spot, and more importantly, most people in the industry that trade huge money pay attention to these things. So they'll work on 5-minute, 1 minute, 1 hour, daily, weekly. It doesn't matter what time frame the channel's on, the same principles will apply. So here we've got just an example of what would happen if it broke out of our resistance or our support. So if it broke out of our resistance, and say this was a 15-minute time frame, we could also look to buy this particular currency pair, and then we could look to put our stop loss below or below the last swing, which is something you'll learn about as you get more advanced. But for the time being, below the low over here of the channel. And then of course you can get the distance of the channel or the range, and then you can work that out, and that will be your take profit. So very, very, very easy. It's buy as it breaks above, take your profit at the range of the channel, and put your stop loss under. And again, this can be a 5-minute, 15-minute chart. You're going to start to see these all over the place, and it's really exciting when you do, because they're great trades. And then of course we set our take profit. So we bring that slide up all the time because it's just such a great thing to do. Another one is double bottom and top patterns. We won't cover that too much tonight, Ty, because of our time constraints, but another one that you may want to look at. Again, if you're going to learn anything, check out those channels, though, very, very important. And then of course, popular moving averages. So another one that you're going to want to put on there is, if you haven't watched our webinars before, we love the 20, the 50 and the 200 moving averages. So we really strongly think that that's worthwhile putting on your charts. So Ty, obviously a bit of information there, hopefully everyone can get it, but I really want to reiterate the importance of channels, and we always talk about the moving averages, so that's always in our webinars every pretty much week. But yeah, when you learn channels and when you learn support resistance, you can use that as the basis of a really great scalping strategy, and then use it also on the 4-hour or 15 minutes. So when coming to scalping, it's also important to optimize our entries. We want to enter based on confirmation, not on gut feeling. Now, one thing we saw with that pound yen example on the 5-minute is that our confirmation was pretty much as soon as it hit that level. So it wasn't really a gut feeling. We'd done the analysis. We knew the trend was up on the larger timeframes, and we knew that was the first touch of that previous resistance. So in that case, because we're looking to scalp it and not for much, we can just pretty much enter, place our stop loss, and then of course we know where our take profit's going to be. Another thing is that we want to also wait for confirmation. So sometimes when we're like looking at a channel pattern, Ty, if the candle breaks out above and closes on the time frame we're looking at, that is our confirmation that we can get involved. If the candle is not closed, and even if it's 30 seconds before the candle closes, do not press the button to buy or sell. I repeat that because the candle may look very different 30 seconds later when the close happens. And unfortunately, no one remembers what happened during that time. They only remember what the market is showing them, which is the close. So Ty, do you want to talk about that quickly?
Yeah, most definitely. Like, it's one of the thing is, it's very easy, especially when you get yourself caught in front of the charts, to feel you need to trade. So, and we understand that everybody, does it at the start, where you're seeing the price action in the candle and you think, well, you need to get involved. You've been here for, half an hour or so, you haven't placed a trade. So it's, I can't really emphasize enough how important it is to wait for that close, because it's really, and if you really want to know, how much a candle can actually change, you probably should just actually observe the market for, a night or even a week, and just watch a 5-minute and also a 1-minute chart, and just watch how the candles can completely change in that 5-minute period. Like, what can be a very bullish looking candle can be a very, very negative one in the space of 5 minutes. And that applies to every single time frame. So it doesn't matter which time frame you're actually trading or you're focusing on. The importance of waiting for those closes is everything, because like Thomas said, when you look at the candles, people are only reflecting on what they see at the end of the candle, not what's happened in between. Because we've got, you can really see a very, very big difference. And a lot of, negative candles or very negative looking candles at some point during their construction looked quite positive. And that's actually what makes them negative in the first place, because they've obviously had a reasonable range. And when it was at the top of that range, they may well have been very bullish or very bearish on the opposite scale. So focusing on how much a candle can potentially change is a really important aspect, because it does teach you that you really have to wait for that confirmation, because you can come undone very, very quickly by trying to preempt what a candle looks like halfway through. And that goes for every single time frame, not just 5-minute or 15-minute. It can be all the way to dailies.
We use this
Probably
example
more
all the
so.
time. Oh, absolutely, Ty. We use this example all the time in terms of role reversal. It's very basic, obviously, where resistance becomes support. That's another type of scalping strategy or strategy that you can use as a base. And this is really great when you're looking at either a range-bound market and trading within it, or you're looking at a trending market, and very similar to what we saw in that pound yen, where the market has come back down. So you can see here on the left, resistance, and then it's come down, it's touched the previous resistance zone, that acts as support, and then it moves back up to whatever the next resistance zone is. So this is pretty much a classic example, just like we saw in that pound yen. Remember, the most important thing about that pound yen trade is first touch, and that it already was an incredibly bullish momentum. So it's probably going to pick up the next time it comes down. I can't stress that enough.
Yeah, and probably the important part of showing that is also if you are trading inside a channel and you're looking for a way to enter that trade when it does eventually break, there's no better way of doing it than at a role reversal zone. So when it does break the top of a channel, for instance, in that example, or even similar to this one here, once it does eventually break that top of that channel, it generally comes back and retests the top, which is going to be your new support. So it offers you a fantastic opportunity to potentially get in if you missed the initial break, but it's also giving you the confirmation that, you know, the channel has probably broken now, and it's probably going to start continue to trending up, you know, or maybe it might start a new channel, which quite often happens as well. But at the very least, you've got a new base to enter a trade.
It's just another example of role reversal. This is often what it can look like. It might touch the first time, then go back up, hit the resistance, then touch a few more times, then eventually go on with the trend. I think this really does reiterate again, the first touch here is quite successful, Ty, in terms of pulling it back up to the previous resistance. And with scalping, you need to be aware that you're not always going to see it running off into the 100 pip, 200 pip kind of take profits when you're looking for 15 to maybe 20 or 30. You need to be aware that you've got to take what the market's going to give you with this type of trade. If you're looking here and you're saying, I'm going to buy this, I'm going to take it over here, well, unfortunately, it's not always going to happen. It's often going to come, stop you out, you break even, that type of thing. It's nothing more frustrating. So be really aware of what you're looking for, and more importantly, the time frame, as Tyrone mentioned before, that you're trading on. Really top tips there from trading for a very long time.
Yeah. We've had a few questions on, we had a few questions on patterns and what sort of patterns to look for in scalping. We've actually got a pattern cheat sheet that Thomas will paste into the chat window. So anybody who's a little bit unfamiliar with patterns, if you're unfamiliar with patterns or how they actually play out, just click on this cheat sheet and actually print it out and pop it near your computer somewhere, so you can always sort of refer to it, because quite often you won't see them appearing on the screen if you're not familiar with them. But once you have learnt them and you know the intricacies of how they work, you will start to spot them a lot in all time frames. So, and they are often some of the best scalping opportunities when you do see a pattern on a 5-minute or potentially 15-minute chart, something like that. So yeah, feel free to click on the chart pattern cheat sheet and print it out and stick it on your wall. It's a really useful tool. Just to remind you, even for the seasoned traders, it's a really good way to just get the constant reminder of what you're looking for, and just as importantly, how to trade it when it does appear.
So Ty, we mention it all the time, and that is that you want to have a trading system based on multiple entry criteria. We really want to have that here with our scalping strategy or our day trading strategy. One thing that we always want is we want as many reasons as possible to be in a trade. So before, when we were talking about the pound yen, I will keep reiterating these ones because they're good examples. We saw that the market had come back down to a previous point of resistance. So of course, that's where the market had come down. Then of course, that would act as support, and that would be, in this case, 25 points. Now this system is very basic here, so it's not going to be good for that pound yen strategy. But in that pound yen strategy, we also had trend in our favor, and that would be extra points, because we know that the longer, larger time frame trends, 1 hour, etc., are all to the bullish side. That you have to add in. Then things like candle confirmation. If we'd seen something there like a engulfing candle or a hammer candle or any of these things that you may be familiar with, that would give us extra points. So we want to have as many reasons as possible. In the other example, gold versus the odd, you saw that we had the pattern of the ascending triangle, we had the resistance being broken, we had the candle confirmation going through and confirming, and then I'm sure on the smaller time frames there was probably a nice engulfing candle off the roll reversal. All these things were we're going into it. So it's important to have multiple reasons, and this is just an example, but this one actually holds very true in scalping. If you look for a pattern, support resistance, candle confirmation, Fibonacci retracement, you have 3 of these reasons before you place a trade. You'll be surprised how successful your trading can be by just breaking it down to this basic kind of thing. It's not the absolute. You're going to want different trading systems for different scenarios, but this one here will work quite well when it comes to scalping.
In terms of scalping, it's a very, very quick and easy application. And you saw how fast we basically put that together. It was a very, very fast way of, really giving it a score. What you're really essentially doing in that instance is basically making sure that you've covered a couple of bases. You're not just taking a stab in the dark. You've done a little bit of research on what the current movements are on a couple of different time frames to get your levels, and also, just confirming what other people are potentially seeing as well. So I think you'd be quite surprised at how it will help you with your trade.
Okay, so just again, with the trading cheat sheet, I'll actually pop that in the chat for everybody now, but this is, you can just go to fxevolution.com/trading cheat sheet. It's pretty good, and then we'll definitely give everybody a bit of a legs up in terms of learning their different patterns. So feel free to go and grab that. It's completely free. You don't have to do anything. So I'll pop that in there. And Ty, I think that really brings us to just a couple of important things in terms of scalping and just some of the hard truths, I guess, we learned. And, tonight is really about trying to decide whether you want to be a scalper and whether you want to start doing that. If you choose to be a scalper, I really reiterate this, you need to be able to put in that time. So remember, Tuesday, Wednesday, Thursday would be perfect times for you to put in the time that's needed for scalping. And I would probably suggest that you would need about 2 to 3 hours every night, every week for quite a few months. And I really suggest that you move into scalping probably about half an hour before whatever market you can trade opens. So if you're in Australia and you're working a job, London would probably be your best time frame to scalp. And you'd get in front of the chart about half an hour before and then trade for the first 2 to 3 hours of the market being open. There's no better time, is there, Ty?
No, and it's really important to have a bit of a feel for what the market is doing prior to the market opening as well. So, probably one of the other important aspects of trading, and also scalping for that matter, is not feeling compelled to trade unless there is a trade there. Don't think just because you are scalping and because you are spending 2 or 3 hours in the chart that you have to place 100 trades. Don't put some sort of a limit on yourself as to how many trades you must trade in a particular period, because all you're doing then is making sure that you're going to be over trading and trading things that aren't there. So sure, if you're going to be there for a few hours and you're scalping, you're going to get probably quite a few opportunities, but don't ever give it a number that you must reach. If some nights you might get 20 or 30 trades, and other nights you might get 1 or 2. Don't force the issue. The trades are either there or they're not. Don't make a trade out of nothing. And if you follow the rules, you can't really go too far wrong on those ones.
Oh, well, there you go, Ty. It happened during the webinar. It doesn't always happen like this. So remember, Tyrone was mentioning before that this role reversal area, being the multiple supports, could act as a very good short level all the way back down into the 137 kind of 80 zone. It did happen during the webinar, so that's good, Ty.
I think that probably highlights really how fast things can happen. Exactly right. I know you can generally anticipate that you're going to be in for an hour or two when you do trade, but look, we talked about that half an hour ago, and it probably happened in the space of, this is a 5-minute chart. It happened in a 5-minute candle. Yeah, and that's how fast scalping can be. So you do need to be aware, and like Thomas highlighted really early on in the webinar, when you are scalping, you've got to be really involved for that 5 or 3 or 4 hours that you're actually doing it, or whatever it is you choose to do. You've got to be on. You can't have distractions. You've got to set aside that time and say, okay, from 7 p.m. till 10 p.m., for instance, I'm going to trade the London session. I'm not going to have the radio on. I'm not going to have the TV on. I'm going to focus wholly and solely on charting, because what's going to happen if you're not paying attention and you are distracted, you're going to miss this opportunity. And what do you think you're going to do? What are most people going to do, Thomas, when they've missed that opportunity and they're kicking themselves because they identified they're going to trade again, and they're going to try and revenge trade because they should have got that opportunity. And, as Murphy's Law would have it, the setup's not going to be correct then, and you're going to lose. So it's really, really important to set aside that time and focus on trading and trading only for that particular period. If you haven't got the time to do that, then you got to look at the bigger time frame, so you can walk away and do other things, do the swing trading, do the longer term, mid to longer term trading. It all works the same. It's just that scalping requires a certain amount of focus for that time to ensure that you get the opportunities when they're there. So you're only trading quality opportunities.
I've got a great question here from Daniel because it's so relevant. Look, and it's really difficult. This is one of the big tough parts of scalping, and that is, where would you put the stops for the pound yen example? So really good question. Thanks for that one, Daniel. Basically, it is difficult with this particular trade. So one thing that you need to know is you need to know what you're trading, and that's why we say you need to be aware of the currency pair. This thing's labeled the beast for a reason. It moves very quickly. This particular candle here is 98 points. So very fast as this move. When you're trading, you need to think about risk rewards. Obviously speaking, what I would do is I would say, okay, if I bought this here and my aim is to get it, let's say up here, 60 pips, where is my next level of support? And my next level of support's really around here, which is the 1 hour 50 EMA. So the 50 EMA is here. That's the only kind of dynamic support we have. We don't have any kind of real price action showing it to us. So this would probably be behind here. It would be probably around a 35 pip stop loss for around a 60-ish, 62 pip take profit. So that's the first one, I guess I would answer, is if you cannot find a price action way of getting a stop loss, potentially use some moving averages. And you'll notice that there's the 50 equals kind of like the 200 here on the 15-minute. Now, in terms of the short side, where are you going to place your stop loss? Another important thing. What I would be doing is I'd be having a look at the way that the price action and the market has interacted. And I'd also be very aware of stop hunts. So the pound yen, massive sell-off here straight into it, comes back up, hits this zone. We'd probably be looking at selling it around here though. So we need to be aware again, where could our stop losses be? They could either be behind here, which is the safest point, because this swing here is not that great. So about here would be a very safe point, or we could put them behind this point here. Now, if we put them behind this point here, I always like to have a percentage behind the candle, the previous candle. So what I would do is I'd usually use the candle, and then I would work out a percentage that I like, usually 10 to 15%, and I'd pop that on top. So I meant it would probably be a stop loss of, what was that size, Ty? It's about 70 pips, so you'd be looking at extra 10, 15. So, you'd probably be up here again, pretty much. So that's the example of what I would be doing in this case. You need to know the pair that you're trading. The pound yen is a dangerous pair.
Yeah. And so that was still a 3-to-1 trade, even with a stop loss. That's safe.
Yeah.
So
that's good. That's what you want.
Yeah. Ideally, in a perfect world, 2-to-1, 3-to-1s are awesome. But be aware though that when you are scalping, you are going to get a lot of 1-to-1s as well. But if they're quality, there's nothing wrong with that. As long as you got your risk management in place and you follow your rules, everything is going to be relative to the time frame you're trading anyway. So yeah, just make sure you risk manage properly and put your stop losses and take profits in the right place. And yeah, then the risk reward will take care of itself. But ideally, if you're aiming for 2-to-1s and 3-to-1s on these sort of trades, you're going to be relatively successful most of the time in the longer term.
And Daniel, I hope just before we wrap up here, Ty, I hope you can see how it just comes out and just kind of barely hits you. And that's why you've got to have that extra percentage. Never do what a lot of people say out there and place it 2 pips behind. That is old school. That's back in 2000s, in the 90s probably, Ty, before even the internet maybe. You do not ever place 1 to 2 pips behind. Always place a percentage behind.
Best not to be greedy. Be a bit more conservative, and the market will take care of you a lot better.
Okay, well, that probably ends us for tonight, Ty. We'll quickly put it over to Q&A. If someone has a question they'd want to ask that we haven't already answered, please pop that in straight now. Actually, I don't even think we've got time. I'm sorry about that, guys. we do need to go into the other ones.
But if
So
you have any questions, jump into, log into the webinar. You've got the link there. We're starting the next webinar in about 15 minutes. We're answering a lot more questions there and doing live market analysis as well. So just click on the webinar link in the chat window and attend our next webinar, and we'll be able to answer any questions that you've got there.
a few people asking here, will this recording be available tomorrow? Absolutely. Jump on YouTube and search Pepperstone and subscribe there, and you'll be able to see it. And in the meantime, also, if you want to jump on and search for FX Evolution, the one with the logo, you can join us and join our fledgling small YouTube channel, which we've just begun the other day. So that'd be great.
Yeah, but it does have a lot of useful information on the patterns we were talking
Absolutely.
about. So you can learn quite a bit of information from that. So thank you so much for joining us tonight. I hope it's been beneficial to you. Fire any questions away in emails if you didn't get a chance tonight. And other than that, we will see you all in the next couple of weeks at the next webinar.
Absolutely. Thank you very much for attending, and we'll see you in a couple of weeks. Thanks, everybody.